Well, it's bonus day again. Third video for you guys. I just was going to call it quits at 2, and I read this interesting article at Silver Doctors about the COT report, which is the Commitment of Traders report. We always look at that. Are the commercials or the banks, they net short, they net long, how many more contracts, paper, did they go short, long, And this fella here has an interesting statement. Michael Ballinger, precious metals expert. He says, COT report warning commercial signal failure looms. The chart shown below, which I don't even see the chart, but is enough to scare even the staunchest of gold bulls like me into treading timidly. The psychological damage of the past 5 years of financial trauma has certainly left its mark on behaviors. The criminality of the bullion bank behemoths is glaring, and their iron grip on price is undisputable, making it very difficult to foray unhedged into these oh-so-familiar and treacherous waters. These interventionist bastards have added 36,000 new shorts, representing 3.6 million ounces of phony, synthetic, never-to-be-delivered paper gold, and engineered a $50 price drop since March 11th. But what I don't think they were banking on was that the miners would ignore them. Last Friday afternoon, after I read the COT report, which again is the Commitment of Traders report, those numbers, I immediately looked over at the quote terminal only to see that the HUI, or New York Stock Exchange ARCA Gold Bugs Index, was going to close out the week a tad below 200 and nearly exactly double where it was on January 19th. And I shook my head with utter reverence. Here you have gold bullion trading as high as $12.87 on March 11th, the same day that the HUI closed at $175.83, with the commercials having moved from 2,911 net shorts on December 4th to 195,000 net shorts the prior Tuesday. Gold is now over $50 lower than March 11, but the gold miners continue to defy both logic and gravity, begging the question, are they predicting another major leg northward in physical bullion? Whatever the answer, the move in my beloved gold and silver miners has been simply awesome, and while I have jettisoned all options and leveraged ETFs, I continue to hold all of my original GDXJ Market Vectors Junior Gold Miners position from late 2015, as well as all of the penny explorers. The long and intermediate term trends for gold and silver continue to prevent the kinds of waterfall declines associated in the past 5 years with relatively high aggregate commercial short interest numbers, such as the one we got tonight for gold, which is 231,787 contracts, in silver 106,646 contracts. So each of those contracts for gold represents 100 ounces of gold, which they don't have. And in silver, it's 5,000 ounces. So 106,646 contracts times 5,000 ounces. It's understandable that the commercials, which is the banks, have pressed their shorts in the physical metals, but that they have failed to return sentiment for the miners is setting up a very real possibility of a commercial signal failure that morphs into an epic short squeeze. The chart shown below, and again, he doesn't even list the chart, is enough to scare. Well, we already read that piece. That was the cover story. As we head into the weekend and enter the second half of April, it is important to remember that May is typically strong in terms of seasonality for the gold miners, but then June and July are completely the reverse. Okay, with Fido pacing nervously outside my door and my partner's overnight bag sitting at the bottom of the stairs, I suspect that there are two members of this family that are desperately looking for direction as to not just the gold and silver prices and not just gold and silver miners, but also the direction of my emotional stability over the next week or two. My lovely lady has become quite proficient lately with interpretation of the COT report and plans her getaways accordingly. Of course, the sound of a 6-iron embedding itself into a chair or a foot lifting a footstool into a 13-foot trajectory over the center island in the kitchen might also be a clue to whether or not Daddy is about to lose it and bears no correlation to the COT or metals prices or anything else for that matter. I think we all are in dire need of an educated guess as to the next $100 move in gold, so that at least Fido will know whether he should expect kibble and filet mignon add-ins, or whether he needs to hone his instinctual food gathering skills, which I had to reteach him back in late 2015 with gold at $1,045. Do we side with the tape action in the mining shares or go all in? Do we pay heed to the commercials and get short? Do I trust my instincts and stay long the GDXJ and select the Junior Explorers? I was taught a great many years ago that when you are in doubt with any particular portfolio position, do nothing. And that especially applies when you are sitting on a big fat profit. Let the market tell you when it is time to ring the register instead of trying to finesse it. Having said that, I am going to freely admit that my short-term nervousness is getting worn down by the hundreds of articles telling me why I'm wrong, which is exactly why I am going to do absolutely nothing except add to my silver holdings into any and all dips and tell the world to chill when discussing the miners. Before I sign off for the weekend, you all know that I like a number of metals, and just as I am a big enthusiast on zinc by way of my association with the Tinko Resources Ltd. and its Ayawalka deposit, it should be no surprise that I am currently warming up to another mineral that represents the cleanest energy fuel on the planet, uranium. I haven't bought any energy stock in many, many years, so this one really has my interest thanks to some great work by a couple of dear friends that are a great deal smarter than I could ever be. I don't know what to think of this either, as far as the COT report shows. The club still has control over the market. The prices are still set on our exchange, the COMEX market, CME group. So when I see them buy a whole bunch of short positions, and the miners don't seem to care, it doesn't really mean anything to me. The price could go up more, it could come down again. They could, if they take a bunch of short positions out, which it looks like they have, that used to be enough to scare everybody off, but it seems like lately it's not. The other question is, what if maybe China or someone else is in there, essentially demanding delivery or buying up some of these metals, or are they actually playing the paper? Is there a big player out there playing the paper contract? But again, when you look at the COT report, it's always a week late. And at the same time, I will say this: who's providing the COT report? The club. So why should we even believe the numbers anyways? Like, why should we ever believe the numbers? But all I know is gold has been up lately. Silver has been up even more. 15, 16% now. Maybe even touching 17%. I haven't even done the actual math on that. It's getting close to 17% though. I can tell by eyeballing it. In a matter of 2.5 weeks. I mean, really? So, again, that doesn't mean the club can't let it build some momentum. Okay, it's going to blow, guys, and then all of a sudden they come in and smash it. But I do know, what Webbot was talking about, and it did say that final 428 move, $428 above, above that level, whatever, for Bitcoin, which I'm going to look right now. It's 448 as we speak. That's a good bit above 428, right? It's a whole $20. So is that the telltale sign that metals prices are going to really start to move up? Webbot seems to think so. But that does not mean that there can't be a day or two where the club tries to smash it and then it starts up again and goes and rallies above where they left off. And then they try to smash it and it goes back up again. Again, I never expected to see in a 2-week time frame metals move the way they have, especially silver, without the club coming in and doing a number somewhere in between there. And I know it did jump up at one point, and then they did hit it, but then it came back up again, and it's well above. Again, psychological level was $16. The chart psychological level was $16.15. I'm sitting here right now doing this video. It's $17.13. So, and it's been closing near, it was closed I don't know what it closed at yesterday, but it was near that, well above 16.15 for sure. So again, sit back, relax. If you want to buy some more silver, buy some more silver. I wouldn't be banking on a big smash. I'm a buyer at $16, $15, $17, $30. I bought some, what was it, $42, $43, somewhere around there in 2011. I was a buyer then. And it was when it was coming down, I was a buyer. In the 30s, I was a buyer. In the 20s, I was a buyer. 16, 17, 15, 14, I'm a buyer. And I hadn't bought in a little while until fairly recently. And I told you that, when I mentioned the other day I was going to buy some more, and I did. Of course, that was, I don't even know if it may have been low 15s when I bought it. 16, 17, it's already up $2. Times 100 ounces, 200 ounces, whatever you get, that's, it's a nice little return. But I never did this or advised doing it as far as buying silver to get a great return. It was always saying, I see where this may end financially for everybody, and it's not looking good. I want to try to protect myself. And as I mentioned, as time went on, I really started studying even more and figuring things out in history. And I said, man, I think when silver and gold let loose, you stand to make a small fortune. Depending on how much you have, you might make a big fortune. And it's very possible. Again, gold and silver has been money for thousands of years. Paper, unbacked fiat currency, the experiment never works. Average lifespan is 39, 40 years. 1971, we get taken off the gold standard. 71, right? 81, 91. 71, 81, 91, 2001, 2011. That's 40 years. So there's the average practically, right? 39, 40 years. 2011, 12, 13, 14, 15, 16. So we're just 5 years past that. So we're 45 years when the average lifespan of unbacked paper money is about 40 years, 39, 40 years. That, again, that's average. Doesn't mean that there wasn't someone in the past that didn't get it to 40, 44, 45 years. Some collapsed before that, before 39, and then 35, years, whatever. So here we are facing that. We got the front cover of The Economist magazine with Hillary Clinton on the front page. The one from 1988 says the year 2018 is going to be essentially a year for gold, silver to come back, precious metals, according to the cover, and get ready for a new world currency, as it said, which is interesting because also on Silver Doctors, as a article from Jim Rickards, world currency backed by gold by 2018, says Jim Rickards. This guy's on TV, he's on news channels. He's been around. I know some people, he used to be CIA, he used to be, he sure sounds like he's not too happy with the government when you hear him talk, though. And he says, while the citizens of China are being taught by their government to protect their wealth from a currency crisis with gold and silver, we're being herded into digital pens to be slaughtered with negative interest rates. For the past 100-plus years, the Federal Reserve has conducted a campaign against the virtues of gold. First, in 1933, using the office of the president, they stole our gold through Executive Order 6102. After this rather unsuccessful effort, the real campaign began. Sometime after World War II, the word gold was basically eliminated from everyday language and conversation. Yes, people in the Western world still discuss gold when the subject of jewelry is brought up. But the people don't really understand gold or why or how it functions as money. I'm not going to read this whole article. I don't need to get into that one. But plain and simple, keep stacking. Keep stacking, because when the day comes, when the prices do move heavy duty, that's the day you don't want to say, I need to go stack some more. That's the day where you say, I hope I got all I want to stack, because I don't want to get in that market now. Holy crap. You want to be on the sidelines waiting and saying, that price today for silver or gold, I'm happy with that. I'm going to go cash in. Maybe all of it. Again, maybe you're going to go buy a house with some of your silver due to the real estate crashing down and precious metals prices skyrocketing. That's it's kind of like two cars, 35 mile per hour, hit each other. It's the equivalent of 70 miles an hour. House prices coming down drastically, silver prices going up drastically. Makes a good case for a cheap house to be bought. Take care.